Rick.
Meghan.
Oh my gosh. Well, I hope everybody has a pen and a piece of paper because we're going to fill you in on the latest with the real estate market.
Yep.
I wonder what people do then they have a job that they go in every day and everything's the same. Are they happy? That's what I wonder because this is it's been quite a year.
Yeah, it's been that's
All
one
right.
for the marketing book for sure.
Exactly. So let's everybody get a pen and a piece of paper, and we're going to talk to you about something that not everyone's talking about because they're afraid to talk about it, but I'm not afraid to talk about just about anything. Just send me a message and ask me a question. But the topic of today is that housing prices are going down. They're going down. And there are quote unquote winners and losers in this scenario. And we're going to walk you through it. So get your pen out and we're going to explain to you why prices are going down and how much to expect them to go down here until rates stabilize into wherever in the hell is going on. So let's talk about the beginning of the year. I know we've talked about this 10 million times. It's the good old days. Back in January, rates were 3.25. Does that sound right, Rick?
I'm right about there. Yep.
All right. So, and also the average price for a house in my neighborhood, which, you know, Anaheim's kind of first time home buyer haven, you know, housing prices, you can get a nice house for about 850,000. So everybody write this down, 850,000. 20% down payment at a 3.25% interest rate. Rick, what was their principal and interest payments in January?
About $2,959.
$2,959. Now, you know, I said principal and interest. I didn't say taxes and insurance. You could probably add another, what, $1,100 a month or something on for taxes and insurance. So that would make the payment just about 4,000. About 4,000 a month. And at $4,000 a month, how much income does somebody need to qualify for a house payment of $4,000 a month? About
roughly 100,000.
All right, so you have to make 100,000
roughly.
Okay.
Maybe a bit more, but roughly, yeah.
All right. So everybody made a note. Now, Rick, if I wanted to buy that house today for 850,000 with a 20% down payment, Rick, what are the interest rates today, do you think? Best guess, no one's gonna hold you to it.
I just give you where the market is kind of trending right now, because it's changing every day, as we know. So let's just say, for our example, we're going to use a 7.25 rate.
7.25. Holy cow. I have other words to say, but this is a G-rated podcast, so I won't say them. Holy cow. All right, let's do the math, everybody. 850,000, 20% down payment at a 7.25% interest rate. Rick, what is the principal and interest payment on that?
$4,638.
$4,638. So the total payment would be more about closer to 6,000 a month.
5,600, 5,700. Yeah.
Yep. That is a 36% increase in payments since the beginning of the year. So how do people think that prices could sustain themselves? Because people don't, once again, look at the price of the house unless they're paying cash. They look at what the payment is and if they're comfortable making that payment, because they're never going to pay that house off. They're going to move in 7 years or that sort of thing. All right. So let's get back to affordability. Okay. So we said that most people in the first time home buyer world are comfortable paying $4,000 a month. Rick, if I wanted to have a payment like the one I had at the beginning of the year, where my principal and interest were about, you know, $3,000 a month, how much could I spend now?
About $550.
About $550,000. So that is a $300,000 difference in how much house that they could purchase. Okay. So
payment, right.
exactly, to keep the payment. So I am seeing housing prices come down. I see a lot of reduced prices. If it's not selling, you've got to reduce the price. Now,
Mhm.
where do we predict, if you had a crystal ball, what the hell, where are we going from here with the interest rates for the rest of the year?
Well, short-term and long-term view. So short-term, the rest of the year, we're gonna be right around this level. I mean, I think we'll start seeing some of the easing of these rates later in the fourth quarter this year. And the important thing is this, it's all about the inflation numbers. So whenever you have indicators that come out showing inflation, the market doesn't like that, right?
Mhm.
So when you see things like, for example, gas prices go up, that's a inflationary indicator, the market doesn't like it. So I think we're gonna be roughly in this environment through end of the year. But we'll start seeing, and look for this in January though. You'll start seeing gradual tapering of the, you'll start seeing the inflation dropping a little bit. The goal or the mark for the feds in terms of inflation, they want that inflation number to be at about 2%. That will take months for us to get down to that 2% level. So in terms of long term, you'll start seeing these mortgage rates drop throughout the year. Now, I'll say this, they won't drop very quickly overnight. They'll be very incremental. And realize that the markets never move in a straight line. It's gonna be up and down a little bit, but
Unlike the increase this year.
oh my gosh, that's been a straight line up. Is really no breaks. I've never in my 41 years have I ever seen a market where there's simply no break in the increase. It's just it's one after another. I think we're close to being on the other side of that curve now, where we'll start in the first quarter of next year, start to see a gradual decrease of those rates. And I think we're going to be in the sweet spot in terms of long-term view around this time next year.
Yeah,
When I
yeah.
say that, I mean, probably around, I haven't, no one can promise or predict a rate, 12 months out, but I think it's going to be around 4%.
So, I mean, let's just talk about this for a second. Okay, everybody, I hope you can follow along. So, housing prices, it's an ebb and flow. It's
Mhm.
a give and take. It goes hand in hand with the interest rates.
Right.
And that is why people were able to pay so much money for houses, because
Mhm.
the payments were so affordable, because the money was close to being free. Okay. So
There you
now
go.
that the rates have gone up, people are going to have to adjust their expectations, adjust their pocketbook. Now,
Mhm.
I do see a winner in this scenario. If the rates go down next year, as you and a lot of other sources predict, and if you could take this opportunity, a little volatility in the
Mhm.
market, and
Mhm.
buy something at, say, a better price, and then refinance next year into the lower rate,
Mhm.
then that could be a possible win for someone, so that's a winner. Let's
Yeah.
talk about the people that are sort of, wishing doom and gloom onto the market. It's like, hey,
Mhm.
if you're getting a loan, to buy a house, it really, you still haven't won here. All the wishing for doom and gloom is not going to get you a key to your new home.
Right.
Um, People that are paying cash, they're probably pretty excited right now, because I mean, geez, last year we wouldn't have anything in the
Mhm.
sevens to show someone that had that kind of cash, and now we do.
Mhm.
But if you're selling a house because you've inherited it, or someone's passed away, probate, trust sales, where you're selling and you're pulling that money out of the real estate market, then you're going to have to look and see, do you want to do it now? Do you want to put it off until later and see how the market goes? It just depends on whatever the instructions are
Mhm.
for
Mhm.
the trust
Mhm.
or the estate. But yeah, I mean, it's definitely,
Well, yeah.
prices are going to have to settle down to where people are most comfortable. But I really don't see, if the interest rates stay about right here, I don't
Mhm.
see the $700,000 house turning into a $600,000 house. I don't see that happening. I do see some pretty good adjustments. I see a big increase in homes in the 700,000s, and I think that that's going to have to be kind of the new norm, and
Right.
people sort of buddying up,
Mhm.
that sort of thing. So, Yeah, that's
Yeah, I
what's
mean,
happening in homes.
and look, the important thing to know is this is not a long-term trend. This is not 2 or 3 years out type of a scenario. I think we're, really start, like I said earlier, it's going to start getting better into the fourth quarter this year and better all through next year. So as these rates start going down next year, that's going to create more opportunities for more buyers to have housing to be more affordable. So, and so I don't think we'll go back to the days we had a year or two ago where we had 30 offers on a house, but I do think we're going to be in a pretty healthy market in terms of offers through most of next year.
Yeah, yeah, good. All right, Rick. Well, this is good info. I hope everybody learned something. And, shoot us a message if you have a question or comment. We're all ears.
Awesome.
Thank you.
Thanks, Megan. See ya.